Thanks everyone for joining. We're just going to give people about a minute to get online and then we'll get started with the presentation. Okay, we'll get on with it. Welcome to our webinar, everyone. The topic today is internationalisation in the midst of slowbalisation. And you can thank The Economist for coining slowbalisation. We don't want to take responsibility for that one. And this webinar is based on the report published by Nous Group and Navitas with the support of the PI from our second triennial global survey of international education leaders. My name is Oliver Jawara. I'm a director in Nous's London office with a focus on international recruitment and transnational education. With me today to present this report and answer your questions are Matt Durnin, a principal from Nous's Toronto office in Canada, who has years of experience in international education across Canada and the UK, and Jon Chew, the Chief Insights Officer at Navitas and one of the leading market analysts in international education worldwide. So today we're going to spend around 40 minutes going through the key findings of the report, and then we'll have 15 minutes for a Q&A session at the end. Please do type questions in the Q&A function in Zoom as we go, because our presenters will pick up those questions as they can and answer them where possible. Otherwise, anything we don't answer during the presentation, we will pick up in that 15 minutes at the very end. So a little bit more about the report, just to set the scene for you. The report drew on insights from a detailed survey of over 200 leaders in international education from across the UK, Australia and Canada, and found really significant alignment across those jurisdictions. Obviously, here in the UK, there are some notable policy differences between us and Canada and Australia, specifically, of course, the lack here of hard international student number caps. What we've seen is that the implementation of restrictions on the dependent visa, particularly for postgraduate students, as well as shocks to some of our key external markets, have created a fairly similar situation where the number of international students coming to the UK has decreased broadly, and we've seen significantly increased competition among universities for those students. We're also, of course, keeping an eye on any changes that the Labor government is potentially likely to make coming out of the recent local election results. And we're certainly hearing that there's likely to be some changes targeting international students. The scope of that we are obviously yet to understand. So there's a lot more commonalities and differences across the jurisdictions of Australia, Canada and the UK. And so I'll talk now a little bit about the major themes that have come out of this report and that our presenters will go into in significantly more detail. The first one is really around internationalisation and revenue. These remain really top priorities for universities globally, but the policy and competitive environment are increasingly challenging. Increasing revenue from international students is ranking dependent. So the top 100 universities in QS rankings are more likely to be looking to raise fees to drive their revenue up, while universities outside that top 100 are more likely to be reducing entry requirements to try to drive volume. But it's not all about top line revenue. There's also an increasingly hard look at the costs in international student recruitment, trying to increase the margin per student as well as the overall volume. Given these challenges, TNE or transnational education is a growing market and one that has a lot of noise and excitement around it, but it is one that has really significant pitfalls and risks, and universities overall tend to lack confidence in their ability to successfully launch and sustain TNE ventures. The final theme that emerges is that although it's pretty challenging out there at the moment, there are reasons to be hopeful. Particularly in the UK, the international university leaders here are more optimistic about the future of international education in the UK, certainly compared to Australia and Canada. So that's a really brief overview of what the presenter is going to talk you through today. And I'm now going to hand over to Jon and Matt to take us through the detail and the survey data that underpins that. Jon, over to you.
Great. Thanks so much, Oliver. And great to be with you all. This is a really timely survey because we are going through a significant transition in international education. We talk about these two eras, which I'll go into a bit more detail, the market era and the managed era. And to really illustrate the sort of magnitude of this transition and what it looks like, I'll bring up this chart, which is a measure of trade openness. So it's the level of global imports and exports as a percentage of GDP. It's effectively a proxy for how much trade is happening in the world. And you can see over history, we've gone through peaks and troughs. But if I draw your attention to sort of about 3/4 along in the period starting 1980, and 1980 is an important year because that's when the UK government introduced international tuition fees and allowed universities to charge a differential fee from domestic students. Happened first in Ontario in 76, and then in the UK, and then Australia followed suit soon after. So from 1980 onwards, you can see this period of globalization and hyperglobalization. So a significant uptick in the integration of world markets. So this was the period of free trade agreements, the WTO, the International Criminal Court to sort of manage cross-border disputes, lots of the frameworks, of course, the EU, lots of different institutional frameworks established in this time, and a period of great peace and prosperity, really, coinciding with globalization and hyperglobalization. We then hit the period from 2010 onwards where it starts to flatline and even starts to go back a little bit. And as Oliver mentioned before, the economists and others would refer to this period as slowbalisation. We've seen the term deglobalization, anti-globalization, re-globalization in sort of more recent days, but the general thesis and sense behind that is the same, which is that trade openness and the integration of markets have really started to slow down and even reverse in many cases. And there are really three sort of big drivers behind this. So what we've seen is in many countries rising inequality, and that is a driver for really strong sentiments around nationalism and nativism. And the local government elections recently in the UK obviously really point to this, just the sheer strength of Reform UK, even after such a long time, even such a long period of living with the consequences of Brexit. You know, we can still see that sentiment is very much alive and well. We've also seen globalization driven by supply chain disruption and some of the vulnerabilities in supply chains. We saw this with COVID. We saw this when the Evergrande tanker got stuck in the canal, and all of a sudden, you know, you couldn't buy cars, computers, all sorts of other things on the other side of the world. So that's led to some real decoupling, reshoring, nearshoring, friendshoring. They're kind of the terms that are being used to offset the original concept of just straight offshoring. And then, of course, we can't ignore the geopolitics, the rise of not just the contest between the two superpowers of US and China, but also what's happening in Ukraine and the Middle East. And of course, for many of you in the university sector, you know, you've seen how that has and continues to sort of pervade research, visiting scholars, all sorts of research partnerships, you know, universities working together across borders. All of that's been caught up in all sorts of national security concerns. So that's the backdrop, and as I keep saying, international education is a product of the times. We really took off when we had that period of globalization. We're now starting to slow down with slowbalisation because, as to quote Bob Dylan, we're a product of the times, but the times they are changing. We saw hints of this back in the first iteration of this survey in 2022. And back then, when we asked the respondents, how would you rate the significance of the following risks to your university's internationalization agenda? We saw a large portion rate macroeconomic conditions, geopolitical tensions, and anti-immigration sentiment as being particular concerns. And from memory, I think that issue around anti-immigration sentiment and increasing nationalism was quite a bit higher for our UK respondents as well. So that was in the 2022 survey. On most of those, the concerns around the risks have actually elevated, and we can throw into the mix two other risks, which are now at the forefront of our respondents' minds. So in the minds of those 200 plus directors, PVCs, DVCs, it's still very much macroeconomic conditions, anti-immigration sentiment, and geopolitical tensions. But you can throw into the mix as well rising interest in alternative study destinations and declining interest in international study. So I think, again, part and parcel of that globalization trend that we've been seeing more broadly across the world. I'll hand over to Matt in a minute, but in terms of what this means, university leaders are indicating to us through the survey that they are changing their approach in order to manage this transition to the managed era. So COVID's come and gone, but there's still a huge level of uncertainty, still quite a lot of upheaval to come. Government policy in particular is the primary driver, as Matt will talk about in this next section.
Thanks, Jon. Unsurprisingly, the financial implications of the current situation came through really strongly in the survey. We did see a lot of respondents focus on the policy changes in particular, and this is a comment that came through in the free responses at the end, saying that short-sighted government policies where politics take precedence over sound decision-making to describe the current era and situation. While I wouldn't disagree with that, I would just point out that I think we're also being influenced by a substantial and historic shift in the market and market structure, where we've seen a decline from in growth from China, where we had the industry largely driven by China outbound study for over 2 decades. That has obviously cooled off and is not likely to return to the kind of levels of growth we saw in the past. And we've moved on to more price-sensitive markets, often higher risk visa markets. So there was a structural change that we're also coping with, regardless of the policy changes, and perhaps driving some of the considerations in the policy changes. Some interesting comparisons between when we did the survey in 2022 and 2024. So quick snapshots here is that when asked if the internationalization agenda is still a high priority at the respondents' university, we did see a softening here. So still about the same, strongly agreeing, but noticeably fewer respondents saying that they agreed with that. That internationalization is well supported across the university, a sharp decline in the strongly agree, and we'll get back to some of the underlying reasons for that in other parts of the survey. The international strategy at my university is adequately reached. That looks roughly 2022 to 2024. And then finally, a new question we added this year is the international ambitions at my university are increasingly influenced by government policies. The overwhelming majority of respondents, 82%, saying that they either agree or strongly agree with that statement. Revenue, of course, front of mind in this environment. We know that just aside from international fee revenue, that universities and most of the major English-speaking study destinations are facing other financial challenges as well. A few really important changes here in terms of university priorities came through in the survey. So respondents were asked to rank in order the importance of each of these areas to their international recruitment strategy at their university in the current moment. So in 2022, from 2022 to 2024, we saw increasing emphasis on increasing international tuition fee revenue, a slight decrease in the second column there in emphasis on student volumes, and a roughly similar picture in terms of international student quality. A slight softening again on the focus on international student diversity in terms of source market. That we think has a lot to do with just the challenges that universities have encountered in widening the recruitment to a larger number of markets and dealing with the higher acquisition costs that often entails. In terms of how universities are reacting to this, we picked up that they're looking to increase revenue through higher fees, reducing scholarships in some cases, and lowering entry requirements for a smaller subset. We'll talk through how that broke down by rankings band on the next slide. So we did see this intention to implement fee increases of over 5%. My impression is that a lot of the clients that we've worked with have already made inflationary adjustments. So this is probably something additional. Strongest intention to do that in the QS Top 100 group. Slightly weaker intentions across QS 100 and lower. We also saw some intentions to roll back scholarships, bursaries, student support, or functional discounting through other means. This is something we've picked up since the pandemic, that there has been some fairly intense discounting practices throughout the sector. Started in Australia as Australian universities were pushing back into the market, very quickly spread to the UK. Canadian institutions also doing a lot of the same in the last 2 years. We have seen an intention to try to roll back those discounts, particularly from higher ranked institutions. That comes through here. And I think you see that acknowledgement on the right-hand side that the lower ranked institutions see this as a highly, highly competitive market where the discounting practices will still be more necessary. Some intention to lower entry requirements that came through most in the middle ranking bands, interestingly enough. So the QS 100 to 200, about a quarter of those and a quarter of the 200 to 400 crowd, saying that they would look at lowering entry requirements. On the overall financial picture, I think Nous's experience working with clients over the last couple of years has been that struggling with the net margin on international students and rising acquisition costs, as well as coupled with the discounting. So this is a snapshot, an anonymized snapshot where we've kind of generalized data that from 4 UK universities that we've worked with that were all in roughly a similar situation. They're all kind of mid-ranked institutions. But what came through from these experiences that, about 25% of lifetime acquisition costs were going to scholarships and bursaries, agent partner fees and marketing about 15%, direct staff costs only 4%. The important thing to take away is that actually after that, those costs were deducted, we were very close to domestic tuition fee levels in all those cases. So very, very slim financial advantage recruiting international students over domestic students from a financial perspective at that point. Now, if these numbers are a little confusing, what's eroding the denominator that's not showed here is high levels of attrition. So international student continuation being a problem at a lot of these institutions. And so any of those scholarships and bursaries extended to the first year get magnified because the number of students continuing on dwindles over time. Same with agent and partner fees. What also came through in the survey is that universities are looking to reduce investment in some areas that looked a lot stronger the last time we ran the survey. One of the interesting points for me, when we ran the survey and did some other research in 2022, we found really strong intentions at the time to invest in agent aggregators and other digital recruitment platforms. We saw a substantial softening of intentions to further increase and a notable but smaller increase in those looking to divest from those platforms. I think there has been some mixed experience with agent aggregators and the outcomes and some compliance issues. And we definitely saw that come through in the survey this year. Education agent commissions and incentives looked roughly the same as it did 2 years ago. Some small increased intention to try to decrease commissions and incentives, but I think most respondents recognizing that it'd be very challenging to do that in such a competitive environment, and where many universities have ended up more reliant on agents than they were in the past. The really shocking, I think striking finding from the research this year was a very strong intention to decrease investment in marketing and recruitment staff. Over, I forgot what the bottom bar is here, but about 36%, 37% of respondents saying they were likely to decrease their investment in marketing and recruitment staff. I think an interesting thing to reflect on, going back to that earlier slide, the breakdown of acquisition costs, what a small sliver of the costs that are actually reflected there. But we know when universities are making cuts in this environment, that's often an easy place to target cuts. Marketing and promotion activities, also seeing the impact of tighter budgetary situations, so lowering investment in those activities as well. And then in terms of growing numbers of international students coming from underrepresented countries, again, we saw an intention to decrease, a rising intention to decrease investment in those areas. Again, I think just reckoning with reality that the dollars and pounds matter more than they have in the past than other objectives. Turn it back over to Jon to talk us through some of the findings around transnational education.
Just before we do, Matt, we've got a question from Michael in the Q&A, which thank you, Michael. Get the ball rolling with some questions. Thinking of the election of Trump and the associated drama related to universities and student immigration in the US, will that benefit other English-speaking markets, or is it more likely that it further depresses interest in international study altogether? Did you want to have a crack at that one?
Sure, I'll take a go. I think, historically we found that when the US is down, that tends to be the largest advantage for the UK. The UK enjoys more of a benefit from that than other countries. Historically, I think every survey I've done on international student intentions has always shown a very large overlap between students looking at the UK and US, and much less with the US students exploring the US and the other study destinations. So I think it is an opportunity. But in general, I think we are picking up some signs that the entire international student market looks a bit slowed, just with a lot of negative press around immigration politics in all the study destinations at the moment. So I think it'll be a bit of both, but there's certainly some opportunities that UK universities should be able to take advantage of in that situation.
Great, thanks, Matt. On to transnational education. So this is obviously a hot topic. It feels like everyone is talking about TNE, and I think just this week, or possibly in the last 24 hours, we saw the announcements coming out of York and the University of Western Australia, both opening up campuses in India. So it really is a hot topic, and it's something that we wanted to add a few questions on and dive a bit deeper into in this iteration of the Global Survey of International Education Leaders. I'll just take you through some of the highlights from this block of questions. So in terms of agreement with the following statements, I think the first and the last statements on this slide are the most telling. So my university will be increasing its focus on transnational education. That's 88% strongly agree. So a lot of the activity, a lot of the buzz that we're hearing is certainly reflected in the intentions that these leaders are expressing. The flip side of that is the final statement at the bottom. My university has the skills and capabilities to successfully execute in this area. And you can see a much lower percentage, about 45%, just over, would say that they strongly agree with that statement. About a quarter aren't really sure, and just over a quarter would say, actually, no, I disagree, strongly disagree. I know that I don't have the skills and capabilities to execute. We also asked the respondents about what models of TNE they're most interested in. And if you set aside the final two columns, the columns on this page largely in descending order of attractiveness, most attractive being offshore pathways, and then joint or dual award programs, study hubs and joint institutes, franchise and third-party arrangements, and then branch campuses at sort of position number 5 out of those 5. And it's quite understandable, really. I think branch campuses in particular are incredibly capital intensive, very high risk. We've seen over the years many institutions get this wrong. So the respondents in the survey are exhibiting a necessary and appropriate level of caution, I think, in terms of grappling with that particular model, where only 47% would say it's somewhat or very attractive. The final two columns sort of focus more on the mode of delivery, and you've got hybrid online and online only. And again, an interesting story there coming out through the survey results, where hybrid is much more attractive, almost twice as attractive as the online only model. And I think, again, that's very consistent with some of the lessons that we're seeing. A lot of the online partners in particular have found, after early success, sort of sustaining the level of growth and yield and revenue has become more and more difficult as more and more players, more and more universities have entered the market, either in their own right or in partnership with OPMs supporting them. So that's I think that's the way that we sort of interpret what's going on there with the different models and different approaches. In the interest of time, I might hand back to you, Matt, to take us through the home straight.
I did have a couple of questions in the chat we might want to deal with first. So Antonius asks, are there examples of curriculum design delivery that are more creative, responsive to this environment that support growth? Would you like to take a shot at that first, Jon?
I'm not sure when the question went in. I presume this is prior to the TNE section, or is this in relation to TNE? Do you know, Matt?
I thought it came in with TNE, but I may have missed it. Antonius, if you want to verify in the chat, you can.
Yeah, maybe I'll have a go in terms of just whether it's TNE or not. I think curriculum design and delivery is not something that we asked about in the survey, and the survey was very much targeted at the Pro Vice Chancellors International. Okay, thanks for the clarification. Yeah. Targeted at, yeah, those in the international offices, those with carriage and responsibility for international. So unfortunately, it's not a question that we specifically put to the respondents. Matt, you might be able to comment on this from sort of the broader experience that Nous has had in working with universities, more on the academic and curriculum side.
Yeah, I mean, I think on the curriculum side, Antonio, it's like what we've seen in general is there there obviously is a lot more attention to employability outcomes from international students than we've had in the past. So I think work integrated learning, apprenticeship opportunities through international education are increasingly attractive. Other more creative delivery models, particularly when you're looking at offshore, I think we've seen a lot of universities experiment with online international, and I think most struggle to really reach their objectives in terms of enrollment and kind of financial outcomes from that. It's a very crowded market. That's been done better in very niche areas. Hybrid T&E programs, similarly, you could point to a couple examples of success, but broadly, it's not something that's worked for every institution. A couple of more creative models I've seen out there is some things that I've sort of intentionally advised universities not to pursue in the past, but there's some interesting new approaches to them. And one example would be online delivery in some markets that are highly restrictive to online, like China, where in China we've seen very online foreign degrees have not been recognized, haven't been validated by the ministry, which has had employment implications for students. So we've often advised universities not to market there. I think some of the interesting workarounds I've seen to that recently is that instead of engaging in an open market and recruiting students, it's partnership with HR departments and large corporates. So there's a couple of firms out there that are offering these types of services. It's an interesting thing to pursue, I think, because you're providing some of that assurance that it's valued by the job market, because your current employer is saying this meets our learning and development objectives, even if it's self-funded. So it's giving some more certainty to the buyer that regardless of whether the degree is ever validated. I'd say this is only relevant to the master's space, but that's one of the more interesting things I've seen come up lately. Antonius's other question is, sorry, go ahead, John.
I'll just add one quick point to that. I mean, it's not quite answering your question, Antonius, but one of the things that we're predicting is as universities think about curriculum design and delivery, in the market era, they would have been focused on what the market wants quite naturally. And we saw, over time, lots of universities become a lot more focused on issues like employment outcomes, student demand, trying to predict what students need for their jobs back home and on the assumption that they would be returning home. I think what we're going to see more of in the future is universities having to be much more responsive to government policy, even around their course portfolio. So for about 12 months in Australia, I'll give you an Australian example. The government said that you would get extra post-study work rights if you did a course in a skills shortage area. And in particular, they singled out teaching, nursing, engineering, and IT. And then the numbers got too big, and then they withdrew those post-study work rights. But I anticipate that many universities will be more and more attuned to those sorts of policies, and will start to expect, and I certainly start to expect, that government will play a much more call it heavy-handed or interventionist role around the types of courses and curriculum that's on offer. And we've seen that even in the legislation in Australia around the caps, where the government is looking for powers to cap numbers even at a course level. So, very much, again, trying to drive students to those areas which benefit Australia. Again, that sort of local nationalist sort of sentiment. What does our country need? We need to drive more demand into those areas. And that's going to be a factor that universities need to pay attention to.
Antonius had another question in the chat about whether there's any evidence of large-scale evaluation of articulation mobility schemes, especially in the UK. Antonius, I'll take a crack at that. I may not understand the question correctly, though. Um, I have taken several kind of deep dives into the articulation and mobility through T&E data. When I was at the British Council before the pandemic, we did wrote a very, very wonky, very long paper to try to put that issue to rest for good about what was actually happening in mobility through partnerships. Um, uh, in cooperation with the UKI, and I think you can still find that if you'd like if you want some good bedtime reading to put you to sleep, I'm happy to share that. But the headline of that data was that in the HESA data you can't pick apart what's mobility through articulation and what's T&E, but I think a lot of you would probably know there's a trick that you can get to a number pretty close to that. And we were able to get some slightly better data in that study to kind of hone in on the students that were really coming through partnership arrangements. And what we saw is that at the time, while both articulation agreements, the number of articulation agreements and transnational education ventures had grown substantially, the absolute number of students coming through partnership had declined. And it declined as a percentage of new first year, first degree enrollments had declined even more sharply. And what we picked up in the one-on-one interviews with universities through that is that the size of articulations was shrinking in most cases. There were, of course, a couple of examples of large articulations that had maintained volume, but in general, it seemed like those opportunities were disappearing. Articulation was still important to a lot of recruitment portfolios. It was just playing a much smaller role than it had in the past. I did see in the data, in the HESA offshore data that was released a year ago, so that would have been 2 years out of date. We did see that kind of spike in the pandemic and just following the pandemic in mobility through partnerships, or just following the pandemic, we saw a spike in mobility through partnership, and that was likely a result of a lot of substitution for T&E, substitution of T&E for overseas study that we hadn't seen in the past that happened during the pandemic, and then some flow through of students. It seemed like we were reverting to the pre-pandemic trend after that. I haven't seen more recent data though. John, did you have anything to add to that?
No.
All right, then we'll try to wrap up on some cautious optimism. But before I get to the optimistic part, I have to talk about some more pessimistic stuff. We did pick up a lot of pessimism, obviously, in the survey, just the timing of it, and that's important to remember. So this was in fall last year is when the survey went out, and so we were really just at the kind of peak of discussion of caps in Australia. I think what's also captured in here was a sense of relief in the UK that would come through the summer and not ended up in a situation with caps. It would have picked up, I think it was just before the announcement of further restrictions in Canada, but Canada was still kind of reeling from the first round as well. Just have a look at what the overall sentiment looked like across the study destinations. So top row proportion who were optimistic about the future of international education in their university, and then below that in their country. So pretty sharp drop off at the institutional level in terms of that confidence. In Australia, massive decline in Australia, 90% to 22% from 2022 to 2024. UK looks much more stable, some decreased optimism at the institutional level, actually slight increase at the national level. Canada, in a similar vein, very negative, like Australia was, 57% decline in optimism about the future at the national level. New Zealand, the lone optimistic holdouts, having a pretty good year down there. I want to say that while we did pick up this very pessimistic sentiment from the sector in the survey, I think we do increasingly see opportunity for optimism. I think that we're all starting to adjust to the reality that's not just the policy reality, but like I mentioned earlier in the presentation, the reality that we've seen a structural shift in markets and we're having to adopt new ways of operating, new ways of recruiting students. And I think we're increasingly arriving at solutions that make this, an era that is manageable and that universities still can enjoy some substantial success in. I think some of the key learnings that we've had is that universities are going to continue to pay a lot more attention to acquisition costs and understanding those at a very detailed level down into markets and within markets so they can make better decisions about where they're allocating their effort. And I think any university who's very successful in this realm 5 years from now will just have an excellent understanding of their acquisition and delivery costs. Additionally, I think we've seen a huge increase in the focus on student retention, particularly with international students. I think universities coming to the realization that when you run the numbers, an investment in student retention that yields any kind of gains can be as beneficial or sometimes more beneficial than that investment in recruiting more additional students, just because we've seen those student attrition numbers rise so sharply since the pandemic. This is just to say that I think there are a lot of levers out there that we can use to control our own destiny more. We're not just subject to the policy environment. And I think that universities are increasingly identifying those opportunities and using them to be successful in what is a very challenging time. I'll hand it over to Ollie to wrap up for us, and we'll do some Q&A.
Thanks, Matt. If we that brings us to the sort of the end of the presentation as a whole. We were able to pick up some questions as we went through, but if anyone has any further questions they want to put to Matt and Jon, please do pop them in the Q&A, and we'll give everyone a minute or two to think about that.
I'll just make two sort of brief comments while we're waiting for the Q&A to come through or the questions to come through. I think, Matt, in terms of the other sources of optimism that we saw come through some of the comments, it's clear that the demand side is still pretty robust and pretty healthy. The demographic trends, the economic growth, which obviously is slowing down a little bit, but nonetheless, that sort of onward march upwards, both in terms of population and of ability to pay for international education. That's been going strong for the last 30 years, and all signs are, in terms of the bigger picture, the demand's still there and will continue to grow. I see a little bit of a silver lining in particular around the comment I made before, which is, even though government policy is more interventionist, it's also creating not just losers, but winners as well. And I kind of used the analogy of the tariffs, right? Tariffs are bad for most people, but if you get an exemption, then it's incredibly good, and you'll do well in that sort of uneven playing field. And I think we will see more and more of that. I think universities that pay attention to what the local needs and expectations of the community are, what the government demands and policy and political priorities are, will be able to anticipate some of these shifts where government policy and regulation will create not just losers, but winners as well. So a possible silver lining there for those who are able to anticipate those shifts.
Thanks, Jon. I thought maybe one thing to ask for both of you to have maybe a slight view on is just around, I know, Matt, you mentioned that the sort of the impact of your in-house international team on the margin to do with acquisition costs is not large. But what are the sort of critical skills you see a sort of successful in-house international recruitment team having? I certainly get the sense that there's sort of a bit around that traditional lead generation, conversion, piece, but there's also increasingly a partnerships management element as well. What do you see as the kind of the core capabilities that are going to be really useful across the next sort of 4 to 5 years?
Yeah, I think we're seeing diverging trends in the sector there, where we see some institutions really keeping the old model and kind of role profile, and we see some changing to um, a much more focus, a much larger focus on offshore resources. So that could either be through setting up their own regional offices, having their own reps overseas, or doing that through an offshore rep company in some cases, or some other kind of commercial partner, and using their on-campus home team to be much more focused on business analytics. We did a report, I think 3 years ago, or something, just early post-pandemic, and one of our respondents said that, put it somewhat crudely, that they didn't need a team whose skill set was based on getting on planes anymore. But I think there was a sense that there was a shift in terms of the needs from your recruitment team being more focused on business analytics and managing offshore staff and partnerships, rather than actually doing a lot of the face-to-face contacts as well. I think the feedback that we got, that line in the report was very divisive when we presented, unsurprisingly. And I think it was also something that people lamented, that you were losing potentially that focus on building the relationships with applicants face to face, understand kind of intuition and understanding of market that comes with your team spending a lot of time overseas. So I think there's, two different kind of paths universities are following in terms of skill set and role design for their IOs. There are pros and cons to each. But I think many have felt pushed to adopt a very different model in the current environment.
Great, thanks, Matt. Okay, I think we're not getting any Q&A through, so we might as well wrap this up there. I hope that has been a useful couple of thoughts to conclude on. Thank you everyone for joining. We really appreciate the engagement with the Q&A throughout the presentation, and we hope you've enjoyed the session. We'll send you a recording of this session along with a link to download the full report if you haven't already got that. But otherwise, thanks for coming along, and we hope you have a wonderful rest of your day. Thank you very much. Bye all.